Welcome to the Merriman Market Analyst and Fun Astrology Saturday Financial Podcast. Thomas Miller, thank you so much for joining us. We're recording this here on November 18th, and we're reading the MMAcycles.com free weekly newsletter for November 20th, 2023, the shortened abbreviated holiday week in the markets, which will be closed in the United States on November 23rd for the Thanksgiving holiday. This is the free weekly newsletter from Ray Merriman, financial astrologer and market analyst, who has just finished the 2024 forecast book, and I finished narrating it this past week, and I can tell you it is a wow, and we're going to be talking with Ray here soon. Checking out the first article to get this week started, November 16th, Thursday edition of the Wall Street Journal. The U.S. economy is approaching what most economists had thought either unlikely or impossible. Inflation returning to its pre-pandemic norm without a recession or even much economic weakness, a so-called soft landing. 6 months ago, the census among economists surveyed by the Wall Street Journal was that the economy would enter a recession over the next 12 months. In October's survey, the average forecast of economists was for no recession. After Tuesday, the probability appears to have dropped further. If they are right, it would be highly unusual. In the past 80 years, the Federal Reserve has never managed to bring down inflation substantially without sparking a recession. And then from the Journal also on Wednesday, November 15th, add falling supplier prices to the good inflation news of the week. The Producer Price Index fell 0.5% in October from the previous month, the largest single-month decline since early in the pandemic. That follows a cooler-than-expected consumer inflation report for October, released on Tuesday, which showed that consumer price growth was flat from the prior month. The encouraging readings likely confirm that the Federal Reserve is done raising interest rates in its current cycle." End quote. And now Ray's commentary. It was a red-hot week on the Geocosmic front, and this translated into a positive week for most global stock indices. That is, the Sun and Mars, both considered hot planets in astrology, conjoined on Saturday, November 18th. Both were in opposition to Uranus, the planet of disruption, November 11th and 13th. With Uranus, one never knows if markets will reverse or break out above multi-month resistance levels or below multi-month support levels. In this case, many global equity markets broke out above resistance amidst Tuesday's very welcomed inflation numbers. In the Dow Jones Industrial Average, for instance, prices gapped up well above their highs of October on Tuesday morning, November 14th, after the first favorable reports came out. The rally, which started from the low of 32,327 on October 27th, reached a high of 35,051 last week. That's a gain of over 8.4% in the last 3 weeks, after having dropped over 9% from its yearly high on August 1st. That fits perfectly with other studies reported in this column about the history of the Sun-Mars conjunction, namely that prices will fall at least 8% and rally at least 8% into and out of that aspect within an 8-degree orb. The favorable inflation reports were also positive for commodities and other markets. Gold jumped from a major cycle low of $1935.50 on Monday, November 13th, to a high of $1996 on Friday, November 17th. Silver rallied from $21.92 on Monday to a high of $24.22 on Friday. In both cases here, the aspects with Uranus were reversals and not breakouts of support or resistance. But Bitcoin was more erratic and more consistent with the nature of Uranus. First, it dropped to a weekly low of 35,000 on November 14th, then surged to a new yearly high of 37,973 2 days later, before starting another pullback. Crude oil was also erratic as it continued to break down to new 5-month lows after first rallying into Tuesday, November 14th at 79.77. Then tanking to 72.16 2 days later. Thus, last week was an upside breakout of resistance in stocks, a downside breakout of support in crude oil, a new yearly high in Bitcoin, and a normal reversal in gold and silver. Uranus, the planet of unexpected and non-conformist, was alive and well last week in financial markets. And now the short-term geocosmics and longer-term thoughts. From CNBC.com on Friday, Boston Federal Reserve President Susan Collins said Friday that more interest rate hikes could yet be needed to bring down inflation. And this from Jeremy Siegel on CNBC's Closing Bell on Wednesday, November 15th. We are not going to have any more inflation. And then this from Friday from the UBS Weekly blog, Dr. Paul Donovan. He said, until recently, wages have not kept up with inflation. Consumers have been able to maintain living standards, but have had to consciously dip into savings to do so. That's a regular reminder that inflation has damaged living standards. Perhaps the biggest problem for politicians trying to take credit for lower inflation is consumers often focus on price levels. The relative price stability pre-pandemic has created a mental idea of what the price of an item, quote-unquote, should be. There is a tendency to feel aggrieved that today's price level is so much higher, even if the pace of price increase has slowed. End quote. Now Ray continues, the good times might just keep rolling along in global stock markets as we enter the season of Sagittarius. That is, the sun enters the sign of optimism and cheer on Wednesday, November 22nd, lasting through the winter solstice, which takes place on December 21st. Usually, this is a favorable seasonal time for stocks, but there have been exceptions. There may be some headwinds this year as the Sun and Mars will now move from their opposition with Uranus to a square aspect with Saturn, which is posited in early Pisces from November 23rd through 25th. This is over the Thanksgiving holiday in the U.S., and markets will be closed on Thursday the 23rd but open on Friday, November 24th, when Mars will also enter Sagittarius. With Mercury also in Sagittarius from November 10th through December 1st, there will likely be plenty of firepower to continue the stock market rally. However, the Sun and Mars in Sagittarius square Saturn in Pisces are indicative of a further propaganda war involving Israel and her neighbors in the Middle East. Mars in Sagittarius, then in Capricorn from November 24th through February 13th, is often a time of war threats involving Israel. Plus, it is a time when crude oil prices tend to spike. The rhetoric between opposing sides continues to escalate with no signs of relenting next week, perhaps with Neptune, the planet seeking peace, turns stationary direct on December 6th. But even after that, Mars is still on the offensive while in Sagittarius, and sometimes into Capricorn. The winners are those who sell oil and those who are most organized and plan well in strategic or military matters. Mars in Capricorn. And now Q&A with Ray. I'm having trouble understanding what is the best or intended trading method to use with MMA reports to be most successful. Options, or futures, or stocks? Thanks, from Ray T. And Ray M's answer, thank you for your question. They all may benefit from MMA reports, but futures, if you trade them, are probably the primary beneficiaries of our studies because they are based on futures or cash prices. If you do not trade them, then stocks and EFTs would be the next recommendation, but you would have to adjust their prices to conform with those of the futures contracts. You can get Globex futures prices at cmegroup.com, which is what we use. Options are only advisable when we expect a big move, such as following a primary cycle low or high, each of which happens 2 to 3 times per year in most markets. We highlighted options with gold in our special report on October 4th when we recommended certain lower-risk option strategies based on Mars entering Scorpio. This paid off very handsomely, almost immediately. But options are not our specialty, yet it is the preferred trading vehicle for many MMA subscribers. Hence, we will offer a special one-day workshop on options led by Derek Panea, an MMA student but also a veteran options trader, who guided us with the options spread recommendations given in the October 4th Special Gold Report. And information on that is in the announcements section. It is note number 5 if you'd like to go to MMAcycles.com, scroll down past the newsletter, and that's where you will find it. A lot of you may be interested in that. That sounds really, really good. Also, what sounds really, really good, if I may say so myself, is the audiobook version of the mundane section of the 2024 forecast book. And fortunately, we're going to be able to release that, it looks like, before the print version, which comes out on December 15th. So we'll let you know when that's available, and the podcast with Ray. And I'd like to just take a personal moment to thank Ray and his daughter Allie and all of the team at Merriman Market Analysts for the affiliation these last couple of years to be able to do this newsletter with you every Saturday and to do these audiobooks. It's really been great, and I appreciate you guys, and I'm thankful for you. And for all of you celebrating Thanksgiving this week in the United States with friends and family, we wish you the very best. Stay safe. Have a good holiday. Thanks so much for listening. We'll see you back on Monday. Enjoy the weekend. Bye-bye.